You've seen the headlines, right? Gold's price is absolutely smashing records, and everyone is talking about it. But the real story, the one that tells you what's actually happening with our global economy, well, it's a lot more complicated. Today, we're going to unpack the real drivers behind this historic rally, and I'm telling you, the answer is probably not what you think. It really all starts with this one single number: $4,000. Seriously, for the first time ever, 1 troy ounce of gold, that's the standard unit, has blown past this incredible mark. It's a jaw-dropping figure, and it means we have to take a closer look. So, the big question is, why? I mean, we're talking about a price surge of over 50% in 2025 alone. What on earth is fueling this kind of unprecedented run? Let's get into it. Okay, so the first and, let's be honest, the most common explanation you're going to hear points straight to Washington, D.C. A lot of people see Donald Trump's return to the White House as the main reason this is all happening. And this makes sense, right? This is textbook investor behavior. Gold has always been the ultimate safe haven. When the world feels unpredictable, investors run to something tangible, something they feel they can trust. And President Trump's actions this year have definitely injected a huge dose of uncertainty into the whole global system. I mean, just look at how the events line up with gold's performance. The year kicks off with Trump back in office. Then, in April, he launches a global trade war, and boom, gold spikes. A few months later, in August, he publicly attacks the independence of the Federal Reserve, and what happens? Gold rallies again. The connection there is pretty hard to ignore. But, and this is where the story really gets interesting, this quote from an analyst suggests that even though the Trump factor is a huge piece of the puzzle, it might actually be hiding a much bigger shift in the market. It's kind of a clue that we need to dig a little deeper here. Because what's happening right now isn't just an American story, not by a long shot. There's a whole series of major events happening all around the world, and they're all coming together to create this perfect storm for gold. We're just seeing instability converge from all sides. You've got Japan, which just had a surprise leadership election that really rattled its markets. Then there's France, dealing with a major political crisis after the prime minister resigned. And of course, back in the US, a government shutdown is just adding another layer of economic stress. And that situation in Japan shows you just how connected everything is. See, the Japanese yen is normally another safe place for investors to put their money. But when the new leadership started talking about aggressive deficit spending, investors got spooked. The yen dropped. And guess where all that money went? It fled straight into gold. So this moment feels totally new, totally unprecedented. But is it? You know, to really understand what's happening today, sometimes you've got to look back. Have we ever seen this kind of perfect storm send gold flying to the moon before? Well, it turns out the 1970s are a really powerful parallel. That decade started with the US cutting the dollar's tie to gold, which, by the way, was fixed at just $35 an ounce. What followed was a decade of absolute turmoil. An oil crisis, huge geopolitical shocks like the Soviet invasion of Afghanistan and the Iran hostage crisis. And through all that chaos, gold just skyrocketed from $35 all the way to $850 an ounce. A really turbulent decade. Kind of sounds familiar, doesn't it? But here's the thing. This isn't just history repeating itself. We are witnessing a fundamental shift in what gold actually is to the global market. Its whole identity is changing right before our eyes. For decades, this was the simple definition. Gold was a defensive move. You bought it when you were worried about pretty much everything else. It was your financial bomb shelter. And right here, this is the twist that is analysts completely buzzing. This time, gold is not playing by the old rules. It's not just going up while riskier things like stocks are going down. In a really, really unusual move, it's actually rising right alongside them. I mean, just let this sink in. At the exact same time gold was hitting its historic $4,000 peak, major stock indexes like the S&P 500 and the NASDAQ were also hitting record highs. It's like investors are seeking both safety and growth at the exact same time, which is a truly bizarre signal for the market to be sending. So what's happening is that gold is evolving beyond its old job as just a defensive play. It's not just a hedge against uncertainty anymore. It's becoming what some analysts are calling an asset for all occasions, something that goes up when people are scared and when they're feeling greedy. So, how in the world do we make sense of this new, complicated behavior? Well, market experts have come up with a way to explain it. They're calling this new dynamic the five-factor trade. And these are the five factors. You can kind of think of it like a cocktail of risk. You've got fiscal policy, like all that rising government debt. That's connected to geopolitical risk in these trade wars. Then you throw in central banks losing their independence, which messes with interest rates. And gold, in this new, broader role, is now reacting to all of these things at once. And this quote from analyst Kyle Rada just nails it. It sums everything up perfectly. Yes, President Trump has strongly influenced gold. His policies hit on several of those five factors we just talked about, but you can't say this rally is only about him. He's just one very big, very significant piece of a much larger and more complicated global puzzle. And all of this leaves us with one final and kind of provocative question. We are watching a foundational asset, the ultimate measurement of economic fear, start to behave in a completely new and unexpected way. So if gold's role in the world is truly changing, what does that tell us about the future of investing? And maybe even the stability of the global economy itself?
All right, let's dive into a really weird thing happening in the financial world right now. It's being called the debasement trade. And honestly, it's the key to understanding why things like gold and Bitcoin are suddenly soaring to record highs. And it all kicks off with a puzzle.
So here's the puzzle that has all the experts scratching their heads. Normally, how investors act is pretty predictable, right? If they're nervous about the future, they buy safe havens like gold. If they're feeling good about the economy, they buy stocks. But right now, they're buying everything, all at once. Gold, Bitcoin, stocks, it's all going up. It's this huge contradiction that, on the surface, just doesn't seem to make any sense.
And it turns out the answer might just boil down to one big, powerful, unifying fear. On trading floors, they've got a name for it, the debasement trade. And if you can get your head around this one concept, you'll pretty much unlock the mystery of what's going on with the market's strange behavior.
So what exactly is the debasement trade? And yeah, why does it have such an ominous-sounding name? At its core, debasement is actually pretty simple. It just means making something less valuable. You know, think of it like watering down your coffee. You've still got a full cup, but the quality, the real value, is way, way lower. In the world of finance, this term almost always points to one thing: the debasement of money itself. And you know, this isn't some new, complex idea. We can actually go way, way back to 1540s England for the perfect example. You've got King Henry VIII, and he is burning through cash for his wars and, well, his very lavish lifestyle. So what's the solution? He comes up with this secret plan. He starts mixing cheap metals like copper into the kingdom's pure silver coins. And for a while it worked. No one noticed. But over time, the super thin silver plating would rub off, especially on the highest point of his portrait on the coin, his nose. It exposed the cheap copper underneath and earned him the not-so-flattering nickname, Old Copper Nose.
And that is the exact same idea behind the modern debasement trade. But instead of worrying about actual copper in their coins, today's investors are worried about governments just creating more money out of thin air. So what do? They're moving their wealth out of traditional government-issued currencies, you know, money like the dollar or the euro that isn't backed by a physical thing, and they're putting it into harder assets, stuff that has a limited supply.
So, the big question is, why now? Why are so many people all of a sudden worried about a modern-day copper nose moment? What's really driving this fear? Well, it starts with a number. The number's so massive, it's kind of hard to even wrap your head around it. $37 trillion. That's the current U.S. national debt, and it is growing fast. A figure like that creates this deep, nagging anxiety that maybe, just maybe, governments have lost the ability or even the will to get their spending under control.
And that one giant number, it sparks a whole chain reaction of fears that just feed on each other. There's this growing worry that politicians will just keep pressuring their central banks to print more money to pay the bills, because that's easier than making tough choices. That, of course, fuels fears of inflation that just won't go away, where the cash in your bank account is worth less and less every single year. Then you throw in some global political instability, like government shutdowns in the US or budget crises over in Europe, and you get this perfect storm of anxiety that just wears down confidence in the whole system.
And look, this isn't just some abstract theory. These fears are having a huge, very real impact on the markets right now.
I mean, you can see the results of these fears plain as day. The price of assets that can't just be printed into existence is absolutely soaring. Just look at gold's incredible 50% surge or Bitcoin's 20% jump. Investors are making a very clear choice. They're getting out of traditional currencies and running toward assets with a limited supply to try and protect their wealth. And of course, there's always a flip side to that coin, right? At the exact same time, we're seeing money flow out of the US dollar and into these other assets. And what happens? The dollar's own value drops, a 9% decline against other major currencies in just 1 year. That's a big deal. It tells you this isn't just a niche concern anymore. It's starting to shake the very foundation of global finance.
You don't have to take my word for it. Just listen to how Ken Griffin, the CEO of Citadel, we're talking one of the biggest players in finance, puts it. He says investors are trying to de-dollarize. Now that is a powerful word. It means they are actively, consciously looking for an escape hatch from the risks they now see in holding US dollars. That is a huge shift in how the market thinks.
So all of this, it brings us to the big multi-trillion-dollar question. Are we just watching a dangerous bubble inflate, one that's fueled by panic and hype? Or is this the beginning of a massive, long-term shift in how we all think about money and value?
The experts are completely split on this. On one side, you have the skeptics who see a dangerous bubble forming. They're drawing parallels to the dot-com boom of the late 90s, saying that a frenzy over one big new thing, and today that's AI, is just creating this tidal wave of cash that's lifting all boats, whether they deserve it or not. But then, on the other side, some of the biggest names in finance think this is a sustainable trend. You've got major banks like Goldman Sachs predicting gold could go much, much higher, while Deutsche Bank has even floated the idea that Bitcoin could one day be treated like gold as a reserve asset held by central banks.
And let's end on this really stark warning from the legendary investor Paul Tudor Jones. He suggests that whatever is happening, the conditions are set for something even more explosive than the dot-com era. It's a powerful reminder that whether this turns out to be a bubble or a whole new reality, the stakes are incredibly high. And it leaves us with a really critical question. When the value of money itself is being questioned, where do you choose to place your trust? Gold has been all over the headlines, right? It's been shattering records, and it's leaving a lot of investors asking, what on earth is going on? So today, we're going to dig into the real reasons behind this historic rally and try to figure out if this is just a passing craze or a sign of something much, much bigger. Let's get into it.
Up, the number that's got everyone talking, over $4,000 an ounce. I mean, that is an all-time high. This is the biggest rally the precious metal has seen since the 1970s. So, the big question is, why? Why now? What is pushing the price to these levels we've just never seen before?
Well, the answer isn't just one single thing. It's more like we're looking at a perfect storm of economic and political anxiety. You've got this whole cluster of events hitting all at once, creating this environment where all the things we thought were certain, well, they just don't feel so certain anymore. And you know, whenever investors get this nervous, they start looking for stability. They look for somewhere safe to put their money. And historically, that has almost always meant turning to one of the world's oldest forms of currency, gold. So what exactly are these short-term drivers spooking everyone? Well, for starters, you've got the US government shutdown dragging into another week, which messes with key economic data. On top of that, there's ongoing trade disruption from US tariffs, plus a weakening dollar, which actually makes gold cheaper for foreign buyers. And to top it all off, we're seeing this huge surge of everyday, regular investors piling into the market. All of this activity, it really points to a classic market behavior. It's called a flight to safety. Investors are scrambling for what they call safe havens. But what does that term actually mean?
A safe haven is pretty much what it sounds like. It's an economic umbrella. It's an asset that people believe will hold its value or maybe even go up when everything else in the market is going haywire. So during a storm of uncertainty, investors run for this kind of cover. And gold? Gold is the classic, quintessential safe haven.
But here's where the story gets really, really interesting. While all those individual investors are a factor, the biggest moves are happening at a much, much higher level. The most significant players in this gold rush are actually the world's central banks, and they are making a massive strategic shift away from relying so heavily on the US dollar. And this chart just brilliantly illustrates the sheer scale of that shift. Just look at this. Between 2010 and 2021, central banks were buying, on average, about 481 tons of gold a year. Since 2022, that number has more than doubled to over 1,000 tons annually. This isn't just a small trend. This is a tectonic shift happening in global finance. And it's not just governments either. Individual investors are following their lead. Now, most people aren't buying physical gold bars and sticking them in a safe. No, they're pouring money into things like exchange-traded funds, or ETFs, which basically just track the price of gold. And a record $64 billion has flowed into these funds just this year. It shows you just how widespread this move to safety has become. Now, there's another really crucial side to this story. See, it's not just about investors running to the safety of gold, it's also about what they might be running from. And right now, a lot of very nervous eyes are watching the tech sector.
And hey, you don't have to take my word for it. This is a direct quote from the Bank of England, when one of the most important central banks in the world says that stock valuations, especially in AI-focused tech, appear stretched. Well, the market listens. That is a very polite, very British way of warning about a potential bubble.
So what you've got is this incredible push and pull dynamic. On one hand, you have tech stocks with these soaring valuations that are starting to get compared to the dot-com bubble. And on the other hand, you have gold, which is seen as this stable safeguard against all the uncertainty in the world. Investors are literally weighing the perceived risk of tech against the perceived safety of gold.
Which, of course, brings us to the big question. Can this last? Gold is at a record high, but we all know that what goes up can definitely come down. So what could possibly derail this historic rally?
Well, there are a few key things to keep an eye on. If that US government shutdown ends quickly, that could calm the markets down. If the Federal Reserve suddenly decides to raise interest rates to fight inflation, that makes other investments look a lot more attractive than gold. And of course, if we see any kind of significant easing of global tensions, the demand for a safe haven could dry up.
And we really don't have to look back far to see how volatile gold can be. It's happened pretty recently. Just this past April, the price dropped about 6% on news that just calmed fears about the Fed. Or go back to 2022, when the Fed started hiking interest rates, gold plunged from over $2,000 an ounce all the way down to $1,600. This hedge can be unwound, and it can happen fast.
But not everyone is convinced this party is ending anytime soon. Here's a more long-term view from Gregor Gregerson, a precious metals dealer. He totally admits that gold will fall at some point, but he believes the underlying economic environment is so favorable for gold that the overall trend is going to be upward for at least the next 5 years.
So that's really what this all boils down to, isn't it? Are we just watching a short-term fever? Something driven by temporary anxiety that's going to pass? Or is this record-breaking gold price a long-term forecast, kind of like a canary in the coal mine, signaling a massive fundamental shift in the global economy? The answer to that question is going to define the markets for years to come.